Hope everyone's having a great day. This is Jay from J&D's Retirement Journey. For those new to the channel, we document our journey into retirement. We talk about investing and saving. Best dividend ETFs for retirement. Is it JEPI or SPYI? Crazy dividend income, guys. If you're enjoying this type of content, please remember to hit that subscribe button. It's totally free and it'll really help out the channel. Don't forget to hit that thumbs up and that bell notification. As we dig into the summary here, the JP Morgan Equity Premium ETF, total assets 38.9 billion, inception date 5/2020. Fund strategy. The investment seeks current income while maintaining prospects for capital appreciation. The fund seeks to achieve this objective by creating an actively managed portfolio of equity securities comprised significantly of those included in the fund's primary benchmark, the Standard & Poor's 500 Total Return Index, the S&P Index, through equity-linked notes, selling call options with exposure to the S&P 500 Index. The NEOS S&P 500 High Income ETF, 3.2 billion, relatively new. It's only been around a little bit less than 3 years. Inception date 8/2022. The investment seeks to generate high monthly income in a tax-efficient manner with potential for equity appreciation in rising markets. The fund is an actively managed ETF that seeks to achieve its investment objective by investing in portfolio of stocks that make up the S&P 500 index in a call option strategy, which consists of a mix of written, sold call options and long bought call options on the S&P 500 index. Fees and expenses, Jepi, 0.35 compared to SPYI 0.68. So you can see it's double the expense ratio, guys. The quotes, Jepi, $56 almost, 52-week range. We're looking at about 50 to about 61. The distribution yield is 7.79 and they both pay monthly. As we go over to SPYI, the quote, this is as of 5/23/2025 for both ETFs, almost hit 49, and the 52-week range is about 42 to 53, and this pays a lot more yield here, a bigger dividend, almost 13%, and it does pay monthly, like I mentioned. As we go into the Morningstar ratings, they're both relatively new funds. Jepi has an overall rating of 4 stars and a 3-year rating of 4 stars. They haven't made it any further than this, and SPYI still hasn't got a rating because it's relatively new. If you guys haven't hit that subscribe button, it's totally free and it'll really help out the channel. We're trying to get to 500 subscribers by the end of the year. Please do us a favor and hit that subscribe button and share with any of your friends that might be interested in this type of content. As we go over to a growth of a $10,000 investment, as you can see, it's very important to be diversified. An S&P 500 fund always outpaces these types of funds. I'm going to leave a link at the end of the video to a video I did comparing VOO, the Vanguard S&P 500 Index Funds, to the Schwab S&P 500 Index Fund, SWPPX. As you could see, over 3 years, that's the furthest I could go with these two funds. It looks like SPYI is doing a little better than Jepi. As we go into the performance, it breaks it down since inception. That's what I'm looking at. We're long-term investors, so I always go for the long run. Jepi's actually doing a little better than SPYI, as you could see. As we go over to the portfolio, net assets for Jepi, it's a way bigger fund, almost 39 billion, 131 holdings. The top 10 companies make up about 16% of Jepi, And it's basically, you could see the breakdown here. Stocks, 86%. The other would be the call options. It has a little bit in cash. As we go over to the SPYI, 3.2 billion total assets. It's more diversified, has 510 holdings, as you could see. And the top 10 assets make up about 34% of the fund. And again, it's basically all in stocks. As we go over to the sector weightings, you can see the breakdown. It's usually IT is usually the biggest sector, but you guys could take a run and go down the list. The top 10 holdings for each fund. We'll start off with Jepi. It has Visa, Train Technologies, MasterCard, Progressive Corp, Microsoft Corp, NVIDIA, Meta Platforms Class A, ServiceNow, Amazon.com, and Southern Company. As we go over to SPYI, they have Microsoft, NVIDIA, Apple, Amazon, Meta, Broadcom, Alphabet Incorporated Class A, Tesla, Berkshire Hathaway, and the option on an S&P 500, which is basically the call options. As we go over to the market cap, you could see they're basically broken down between giant, large, and medium, both funds. And it's basically all in North America, which is the US. As we go over to the risk and returns, I like showing this. The beta, anything over 1 is riskier. Anything below 1 is pretty conservative. And you could see Jepi is pretty conservative. They still don't have a rating for SPYI. Right now, I like both funds. I do own a few shares in SPYI. Right now, I'm accumulating QQQI. Once I'm done with that, I'm going to start buying more of the SPYI. And after that, I'm going to go into Jepi. Since I'm close to retirement, we're looking for more income. Right now, we're approaching around $33,000 in yearly dividend income. My goal is to get that to 50 before we retire in the next few years. It all depends on your situation. I'm looking for income, so these investments are right for me. If you're closer to retirement and you want some sort of income, these would be great. If you're younger, I would say go with an S&P 500 fund. You're looking for more growth. That's my opinion. But like I said, talk with your financial planner. I am not a financial planner. Do your research before you invest in any type of security. All this information is right off the Charles Schwab website. Any financial website or broker, you should be able to do some research. Thanks again for watching, and don't forget to hit that subscribe button.